Hey there, everyone. Welcome back to another exciting week in the stock market. On Friday, I talked about why I wasn't ready to be overly bearish on the stock market and why I said that it was time to wait and see and to watch what could happen. And I gave you that progression across the different indices from the Qs to the SPY to IWM and also over to Bitcoin. So we're actually going to look at those in the pre-market hours this morning and see exactly how they shaped up and what exactly could be coming our way, especially with a potential Powell scowl coming for us on Wednesday, right around that 2:30 hour is what we're looking for. So I'm going to put up the charts for you and we'll talk about what's coming our way. So very first thing, the CME Fed Watch tool. The interesting thing here as we look at it is that we have this little 0.2% over here, which means nearly no chance. But the interesting thing is that it's on the actual rate hiking side of things. And if we go out to July, we actually have a 0.1% chance. If we go up to September, we have a 0.1% chance. It's weird that the bond market would be like, potentially it's there. So that must be that fringe inflation case from the tariff news that we have, or maybe it's even some of the things going on with Iran and Israel that's rattling the bond market a little bit, saying, hey, there might be further chance of inflation here. The Fed might actually have to raise rates just in case things do get out of hand. And the combination, maybe that's that small fringe eventuality. But if you look, you should really pay attention after that to the bulk case that we have, that this is just like a shadow, a very faint shadow in the minds of the bond market as we look for it. By the time we get out to October, that hike side of thing disappears, and the same thing for December. So really the next 3 months out from right now, out to September 17th, which happens to be my mother's birthday. Happy, very early birthday, Mom. So looking at across the next 3 months of meetings here, the next 3 Fed meetings we have, the one this month, the one at the end of July, and then the one at the middle of September, there's that weird chance in there. So that really tells us that the bond market expects that we're going to know a whole lot more by the time that September rolls around. So let's go back to June here, and the fact that there's pretty much no chance that we're going to get the rate hike according to what the bond market has to say right now. There's just not data to support such a thing. So the real big thing that we have then is the summary of economic projections that comes out. And we really want to see what the Fed is talking about in terms of GDP, in terms of labor market strength, in terms of what they expect the longer run inflation to be. And then, of course, where do they see the federal funds rate going by the end of 2025, by the end of 2026? Do they expect us to see a further cutting cycle, or is it going to be something that they're still keeping on to that higher for longer, where they're going to continue to be very strong about where they see things going? Honestly, there could be that pretty big potential that we actually see not really a lot changing, if anything, maybe to the slightly tightened side in terms of their funds rate. We'll watch and see what it is that they have to say. Hopefully they tell us dovish news. Hopefully they talk down this thing and that the market is able to go bonkers from where it's at right now. And with that said, we should really look at where the market is actually positioned right now. And we'll go from there. We'll talk about the considerations that we should have. So here's the chart that we have for QQQ. And I keep on looking at this triple top here and thinking about where we're at right now. And the high potential that's exactly what it is a triple top, and that we should be ready should we get back to these all-time highs, or should we see that we fail to break this peak that's up here. So that's something that I'm watchful for, and I'm not interested in trying to catch the top if we're there. Instead, I'm interested in when the technicals are suggesting that it's time to go further south. And I said on Friday that I just didn't think that now was the right time. We caught support down at the 13, and we should wait for Monday to see, do we get back up above the 5? Watch for the break at the 13. If we actually get that, then we can start to be like, okay, well, is that 513 cross coming for us that tells us that there's some near-term weakness coming our way? I don't think that we have the catalyst right now to make that happen. So right now, I still think that we have that potential for new all-time highs coming, but we do have to keep the 13-day in order to make that happen. S&P 500, SPY, the ETF that tracks the S&P 500, so far as in the pre-market hours, up above the 5 and the 13. We caught that support. So right now, the general direction is still up according to the technicals that we have, that we don't yet have the signal coming from the technicals that saying, hey, now's the time to get out of this thing. I did mention on Friday about the long-term thing that's in my mind. The thing that I keep on coming back to is the bearish divergence across the peaks that we have in the RSI and the rampant price rise that we've had, the price appreciation in the S&P over that time. And then when you look at this on a monthly basis, it, instead of looking like a triple top, it actually looks more like a double top, which is definitely something to watch out for, because the market doesn't necessarily, it's not like, all right, we're going to line up the news with what's happening in the market. But I will say that if we happen to be near what would make for a double top, like sort of kind of like we are right now, and there's some big negative catalyst that happens, like we'll say a further escalation that gets more countries involved into Iran and Israel conflict that we have going on. If that happens to be the case, maybe that's that next knee-jerk reaction that the market has. Hopefully that's not the case. Hopefully it's not a tariff-driven thing that we have. But I will say that with that pain comes some outsized joy that comes along with it too as we start to make that rise back up. And in my previous videos, I called that bottom around that 23.6 level. And that actually goes back, you'd have to go back in time to my videos prior to, I think, April the 7th or April the 9th. And I have to look and see where we had that massive green candle day. And I said 23.6 would be on fears, and that if we pulled all the way back to the 38.2, and once again, that's that pretty big, significant, like years long in the making, actually decades long in the making, Fibonacci retracement levels that we'd be looking at. The 38.2 would come from actual evidence, actual facts of recession, or the punishing tariffs actually being instituted into place, or actual facts of recession coming our way, not just fears. We saw the fear level. We didn't see that actual hit level for us for any one of those things actually landing so far. So we'll watch and see as the technicals play out. Like I said, right now, I still think my base case is that we have the new all-time highs coming for us, and that assumes that we can keep these moving averages moving on upward for right now. Still new all-time highs for June, but we might have to replan based on what we hear from the Fed, what we hear from tariff news, and what we hear from that furthering conflict in Iran and Israel. That right now we saw that first knee-jerk reaction to be like, oh, and now we're bouncing back up off of that. As long as it stays contained to between those two countries, then maybe that's exactly all that happens, and then we continue our path back upward that we had. We'll watch and see from there. We'll go to IWM. Let me take down the technicals that I've drawn on here for a moment and just look, because I said here is what we don't want to see, is that breakdown below the 13. In the pre-market, we're recovered up to the 5, but we actually need to break up above the 5. That would be a very strong sign. If we fail to break the 5, then we likely have to retest the 13 again. And then that 13 support has to hold, which it didn't last time. It has to hold so that IWM doesn't roll over and turn into bearish territory. The Russell 2000 stocks that IWM happens to track are the most sensitive to economic stress. So if there is going to be a reaction, you're definitely going to see it here. Now, I did talk about Bitcoin and what happens when you actually, let me go in here. This would be a little bit more risky yet looking at the crypto side of things. I'll take down the drawings on this, and you can see we pulled back. Not only did we break the 5 and the 13, but we pulled all the way back to the 50, then took that big healthy bounce. And I said that this long wick that we saw happening on Friday as I made my video, I said that this is a bullish sign, especially going back up on top of the moving averages. Well, here we are on Monday, and this is exactly what I mean when I say that I don't want to be overly bearish, because here we are back up above those moving averages. Now, it does matter where this candle closes today for Bitcoin. The RSI is rightly above 50, which is a good thing to see on a daily basis. It's nice to see that cooling that we have for Bitcoin. Weekly RSI is perfect. Monthly RSI, it's a little bit warm, coming in at almost 70 for that RSI. And if we zoom out a little bit on this and take a look at what we have, you can see that we actually have a bit of a consolidation happening between the tops and the bottoms. We have the highs coming down and the lows coming up. That's the consolidation I'm talking about. And no real volume conviction. It's actually tapering off. So this is that battle being fought for Bitcoin right now. So where exactly does crypto stand? I would say that it is trying to make up its mind of where it wants to go. Does it want to take that skyrocket? Easy monetary policy from the Fed is really going to help that out. So this Wednesday could be a very big day to watch that happen. Are we going to get that escalation in conflict between Iran and Israel? Are we going to see it start to spread outward to other countries' involvement? If it does, that could be a next moment where the risk assets really take that next smack, and then we have to watch and see where exactly it goes. But as you saw with this rapid recovery to, hey, this is going on, and then, all right, well, so far it's those two countries. Even though there seems to be some pretty significant escalation between them, the market doesn't really seem to care so far. So I'm going to keep on tracking that and see how the market reacts to different breaking news that we have happening. And right now, like I said, the market seems to have had its reaction, and now some of those other catalysts that we have to watch out for, like I said, Trump tariffs, and then the Fed meeting is going to be absolutely huge for that. Easy monetary policy, by the way, if that gets sniffed out from a dovish Fed, if that's what we get, then we can watch that price appreciation. We can potentially break out to the upside on Bitcoin and break to the top of this. There is a bullish bias, not only by the RSI, but also the moving averages. We have the fact that the price action's up above the 50, the 5 and the 13 are kind of dancing with each other right now, but the price action is above both of those moving averages. The green above the yellow is the bullish look that we're looking for. So let me take down my drawings again so you guys can see that. As a matter of fact, I'll do you one better. I'm going to take down the candles on this too so that you guys can just look at the lines. So we have green over yellow over red, like an upside down traffic light. This is the bullish setup that you're looking for with the price action riding on top of those moving averages. That's that bullish look. Look where we had that little bit of a sell-off, how we dangle off the green and the yellow, but notice we're still above the red. We touched the red, bounced off it healthy, and that's when we came back. We tried to get back to those all-time highs, couldn't quite do it, but like I said, the highs coming down, the lows coming up, and Bitcoin right now has that bullish bias. And here on the simple moving averages, we're back up above the 20, which is huge because if we don't get that cross of the 20 down over the 50, which would be a bearish signal, then we're in good shape. But look at what happens when we're riding, and when we're in true bullish territory, that we're riding above that 20 period moving average. We're above the 50, we're above the 200. As a matter of fact, what we want to see is 20 over the 50 over the 200. That's the most bullish thing with that price action on top. The fact that we're dancing around the 20-day, this is your evidence that right now that battle's being fought. It's further evidence. But like I said, blue above this magenta color above orange, 20 above 50 above 200. So fastest moving average above the slower moving average that follows it. That is that bullish setup. When they reverse, that's where you start to get those bearish setups instead. And those are more easily seen if we show it with the 50, the 5, the 13, and the 50 on here. When we get more of a traffic light kind of color on this one. And once more, I'll take down the candles. There we go, so that you can see this when it looks like a regular traffic light, red over yellow over green, with the candles dangling off the green. That's where you see that bearish movement taking place instead. And so, like I said, right here is that bearish movement that you can see with that price dropping. And then when the price action starts to mix with those moving averages, that you're not riding on top of them, you're not down beneath them, that's that battle being fought. So over here's battle being fought, and then when we start riding on top of the moving average, look what happened. That's where we got that green candle moving in there. So you guys can see that decisive move, broke back up above the 50s. Then we started riding on top of the green, which was above the yellow, which was above the red, mixed a little bit, and then back on top, rode it out a little bit more, and so on. So other cryptos that I like to watch on here, Ethereum, this one might outperform. I mean, honestly, let me take down the EMAs for a moment. Let me put up the SMA, because that 200-day is a persistent problem for us. We were able to break out above it on Wednesday. Actually, we broke out above it on the 10th, which was Tuesday. And then Wednesday sent us back down for a little bit. But once again, we have those bottoms coming up, tops coming down on this thing, with sort of a bearish bias here in terms of the 200-day, but quickly approaching. The way that this 50 is approaching that 200, that breakout moment could be coming. It should easily push that 20 period up above it. And one thing that I just want to look at real quick is to see, and for these EMAs, you get further weighting towards the front end of things. Just let me grab the tape measure here, and I just want to count the number of candles. So 20 bars back. This is that reason that you're seeing that flat movement for the 20, which is the blue moving average that we have, is you'll notice we have similar price action all through here. And so that's what leads us to around that 26-ish, 2600 number that we're looking at. But once we start to go back here's 39 bars, and then we get to this consolidated period back in here before we really ripped out of that thing, 50 bars happens to be back here. So that means we have 11 days until that 50 really starts to push into that. So we'll see. The next 2 weeks could be absolutely huge. Week and a half to 2 weeks for Ethereum should be that thing that gives us that golden cross moment, assuming that we don't get some massive selling pressure in the meantime where we break back down below the 50. The 50 should push us up, and that should also help push up the 20 and the 200 as well. So we could have that breakout coming sometime soon for Ethereum, and why I believe it absolutely belongs on a bullish list here. Even though we're down below that 200 SMA, we are up above the 200 EMA, which for whatever reason I don't currently have up here. But here, I'll put it up here for you, and we're going to take that color and we're going to make it this nice icy blue color. Make it EMA, change the style on this as well. Click on that, and once again, the icy blue color, perfect. And now we'll take that back down. Let me hit OK on that one. There we go. You can see the 200 EMA that we're above, and then we're also above the 50 EMA, and this last candle is trying to ride back on top of the 5 and the 13. That'll be the first sign that we get of that bullishness with those other moving averages ready to follow. Seeing that 50 start to shy away from the 200 EMA that we have on here for support. Near term, this is bullish. RSI is up above 50. XRP also taking a very, very important bounce off its 200 EMA. If we get on top the 50, this thing could be off to the races, especially if Bitcoin and Ethereum take off. That can be further help with XRP as well, pushing back up above. And then my friend Solana here, Solana's trying to get up above its 200 EMA, taking a nice bounce off of this support line that I have in here at 143.30. I said if we get rejected back here, I said it getting rejected off that resistance could bring us back down to that 143 number, and then support down around 120 below that. We caught a double bottom support on this one, a very good sign. If we can get on top of that 200 EMA, maybe that's when we start to retest these previous peaks that we get back here around 183. The top of this resistance, by the way, is around 166 if you want that number, if you can't see it on screen. So also, Sooie for this one. And once again, that double bottom look, breaking back up above the 200 EMA, trying to be bullish. It's RSI down below 50 so far, but come on, Sooie, bring the hogs home. You can absolutely do this one. We have not a lot of great look so far after all these rejections, a bit of a head and shoulders kind of look. It's very heartening to see that we caught that sort of support. We need that next big catalyst. If we zoom out, you guys can see we are in a very, very large consolidation pattern here with this symmetric triangle. So staying up above this 50-ish, this middle-ish line that we have right around 288 is a very, very strong sign, especially if we go back up and retest this resistance line, which the last time we got that big fat rejection that I talked about in this resistance area. And I did move my price target up on this thing all the way up to $5.46 if we're able to really make that move from this last move that we got. It can go even higher if we end up filling out this entire consolidation pattern move that could push us up well north of $6 on that one. So guys, if you want to see more of my analyses, more of my technicals, you can check it out over in the Discord. Links in the description. Community, 1,000 members over there. I'm one of the panel experts. There's a whole team of us to support you. Stocks, crypto, bonds, whatever it is with finance, helping you in your journey towards financial freedom, and then also building alpha in your portfolios. We'll share news, we'll share information, we'll share the trade setups that we do, the trade setups that we see coming up. You can see our buys and sells with receipts over there as well. You can talk to us and the other community members. And there's also tools in that ecosystem that is that Discord with the bread bot that can tell you when the big moves are coming up or down to your favorite plays. And then also AI charting, and then also the advanced chart abilities as well. All over in the Discord. Links in the description. Code word doctor using the earner tier is going to get you the best discount possible. 50% off your first month sign up, where you can try it out for less than $1 a day. And I think you're going to love what you find. I think you're going to find yourself staying for a while, as so many others have, thousands of others, as a matter of fact, have. And it is the best community that I've ever been a part of, not only by the people that are there, but also through the products and services and leadership that are also present. And if you guys want to know more about the impact of the technicals that I'm talking about, want to know more about how to trade those technicals, and then want to know how to get outsized gains through options trading, there's some coursework through Stockmo Academy. Stockmo is a personal friend of mine who put together some absolutely incredible courses with my doctorate in education, 17 years of experience. I can tell you, I vetted these courses myself, and they are absolutely incredible, and you guys can check them out, learn more about that stuff, and they will really help you to up your game. They can pay back in dividends what you put into them. Bundling the two courses and using the code word doctor is going to get you the maximum savings. Again, same code word as for the Discord that I mentioned before. You can use code word doctor on any combination of the courses. Buy the options, buy the technical analysis, bundle them together. Code word doctor is going to save you no matter which way you do it, but bundling the courses will give you an extra discount on top of it. Guys, let me know what you think about the stocks, crypto. Where do you think the market's headed? Are we headed to new all-time highs? Are we going to head back down, retest the near-term lows that we had back around the Liberation Day time of things, around the April 2nd time when Trump came out and made his announcements? Are we going to have that sort of rip down? Is it going to be worse? Or are we going to skyrocket from here? Are we going to get a dovish Fed, hawkish Fed? Let me know down in the comments. Otherwise, I'll see you over in the Discord, and I'd love to hear what you find out from those courses. Remember, those links are in the description down below. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning. We'll see you next video.